Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square, New York City, we have Tal Cohen. He's the executive vice president of North American markets at Nasdaq, and we're here to discuss Nasdaq's application, the UTP application to the SEC. It's great to have you with us as always, Tal. And on February 5th, 2020, Nasdaq submitted its UTP termination application to the SEC. What is this in response to?
So it was a response to the SEC's request for a proposal on thinly traded. But if I actually took a step back, we actually came out in 2017 with Revitalize, which is our blueprint for issuers, in which we first mentioned UTP revocation and thinly traded. And then if I fast forward to 2019, we came out with our secondary market paper, which was Total Markets, focused on micro market structure, in which we also mentioned UTP. So we've been at this for the past 3 years. We're happy to see the SEC ask that question, and we were delighted to respond.
Do you think this will provide a catalyst to introduce new reform and innovation?
We do. We think the SEC is going to take our proposal and others' recommendations seriously. I think there's time for action. I think issuers recognize it's a time for action. I think the general market feels like we're working for the top half of the market, large cap companies and mid cap companies, but the small caps have been left behind. So it's important that we address this.
So this is around lower volume stocks and giving them the ability to list their thinly traded securities on one exchange. How will that benefit them?
So by consolidating liquidity, we're taking complexity out of the system. We're taking operational risk out of the system. We're hoping when we consolidate that liquidity, it presents better trading opportunities for investors. So it will clearly benefit investors, but we're not taking away choice. So to the extent that the OTC or the over-the-counter market provides value because of price or size discovery, we want to allow for that. But then when we go back and we think about the issuers, we want to make sure that the issuers understand that the markets are working for them. So by removing this complexity, we're making sure that while for Apple, a complex, fragmented market aids price discovery, we think for illiquid names, it does not. So issuers will understand that, and that's part of a grander or bigger proposal that we have with issuers today.
How many Nasdaq-listed companies will be defined as thinly traded securities?
So there's likely over 1,000, but it's worth noting that this is an issuer choice matter. So we wouldn't, or no exchange would dictate how a particular stock would trade, but rather an issuer now has the ability to opt in to a different way that the market works for them.
And part of our market structure reform revolves around transparency. How will this allow issuers to address investor concerns around transparency?
So by, once again, consolidating liquidity and understanding where liquidity resides from a lit market perspective, it will make it much easier for investors and the market in general to consume that information, and then that will aid transparency.
All right, Tal, as always, thanks for joining me at MarketSite.
Thanks for having me.
And thank you for joining me on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.